Hey guys, and welcome to the Working Money channel. So Danielle DiMartino Booth here on Twitter. If you guys do not know who she is the CEO and Chief Strategist at Quill Intelligence and also a former Federal Reserve insider. She just came on Twitter and said liquidity is drying up around the world, leaving investors with little appetite for even bargain EM stocks. So guys, the liquidity drying up, and so, as a result, she's saying not even the big investors are buying at a bargain. JK down here saying all that money printing and no liquidity, things that make you go, or do they? Is this par for the course? Is this what we are to expect before a huge financial collapse? I mean, the markets are already free falling. This is, at least it seems to me like it's the beginning of the end. The DXY, the dollar index, has now finally reached its top. So I showed you guys this in a former video. Take a look at that Fibonacci breaking through all the levels, and now we are at a full Fibonacci reaching its former top over here. And when we find resistance, we usually see a collapsing. So could dollar dominance finally collapse? All questions that should be in the back of our heads as investors, considering the crypto market is also taking a bit of a dip. Kim.com here also bringing something up, and Real XRP Boy responding, wonder why crypto has been tanking for a while on Zero News. Those in the know about upcoming US government crypto regulation are selling first. Here's what's coming. So he lists them off. Ban of all USD pegged stablecoins, restrictions on crypto use, KYC requirements for all, and big push for US government coin. Real XRP Boy responding, going to be a much bigger drop on insider knowledge of government regulations. So what is this going to mean? Of course, so many things at play here. Let me just bring up the crypto market real quickly. I'll bring up Bitcoin first. Bitcoin right now trading at $32,600. So the lowest we have seen it in a while. That said, though, and I'm going to say this with confidence, we are still not breaking support. I know it feels bearish, guys, and I mean, it is bearish. Look at how many weekly bearish candlesticks we are now seeing in a row here. We are still not breaking support. This low that we saw way back in June of 2021 was at 28,600. If we go down below that, I will say yes, 100% bearish, but we have still not broken support, similar to what we have seen in the past where we have formulated lower lows, okay, and then finally capitulated down here. You can see these lower lows formed, okay, as soon as the bearish trend commenced. Here we saw a 50% correction, then we saw a new all-time high, another roughly 50% correction, and yet this trend is moving to the upside. Now it has been broken at this point here, so it's not looking as good as it was. However, we still have not broken support. So what are we to think about this? Lark Davis here saying, Bitcoin has just completed its 6th red weekly candle. The last time this happened was in 2014. Holy cow. So 6th weekly candlestick, negative or bearish rather, weekly candlestick in a row. We have not seen this apparently since 2014. So at some point in here. So this is the first time we've seen this. Coins Kid here also mentioning this in relation to XRP. XRP sitting on the edge of about 55 cents. Cliff peering down. The last time XRP put in 6 weekly red candles was way back in 2017. We all know what came next. I can't be bearish until key support is lost, though. Sorry, and of course this is not financial advice. So with regards to XRP, guys, and this is interesting. I'm going to bring up the XRP chart here real quickly. We are now looking down the barrel of 1, 2, 3, 4, 5, 6, and it's looking like we are even formulating a 7th red bearish candlestick for XRP. Now, what happened when we saw this on the chart? So this is, again, just a screen grab showing us those bearish candlesticks. And back in 2017, when we saw, 1, 2, 3, 4, 5, 6 in a row, that was over here. And sure enough, from that point on, XRP did make a huge bullish move to the upside. So this shakeout, right, as per Kim.com, happening on Zero News, I think it's part and parcel to the rest of the market, the S&P 500. Right now, here, let me get that stuff off the chart there. I'm recording this before the market is opening, so pre-market trading is already looking like it is going to open lower than it did close on Friday. Today is Monday, May 9th, so markets open at 9:30 Eastern Standard Time. Let's look at the NASDAQ. Oops. NASDAQ here, also something similar. We are seeing lower lows here for the NASDAQ. DJI, Dow Jones Industrial Average, also looking like it's going to form new lows. So the rest of the market in turmoil. Crypto, taking a look at the total crypto market here, including Bitcoin, still holding that level of support. You can see it's right there, okay? Holding this level, the level we saw from back in January, but really if it goes below 1.12 trillion, this level here, then definitely call in a bearish, move to the downside. Who knows how low it can go from there. Although some people still optimistic, Stefan Hubert, and you should be. I mean, ultimately, the fundamentals have not changed. He says, a little game, you will not find a point in time like today in the XRP chart since 2014, where 7 red weekly candlesticks are in a row. Although unpleasant, it worries me zero, because the fundamentals have not changed, and the outlook has never been better. So, there's always going to be the optimists as well. With regards to fundamentals, of course, Stefan Hubert on point there. I'm not worried about my XRP investment. I'm still hodling. It might be a time to accumulate more depending on what your cost average is at this moment in time. XRP trading right now at 53 cents. The lowest we saw price levels in recent memory we're in and around here, so that would be about 50 cents. So XRP still holding support. I'm not bearish yet. It is still holding support. If it does go below 50 though, bearish territory for XRP. So like I said, some people optimistic like Dylan Leclerc here, a Bitcoin dip down to its realized price, average on-chain cost basis, is entirely possible and has been consistent with previous market bottoms in bear market cycles. And he says the realized price is about 24.3 thousand at the moment. So that metric is demonstrated here by the orange line. So he's saying, even if it goes down to 24.3, that is normal. We have seen that in markets in the past, and what it notes here, like when it crosses over like this from back in 2015, 2016, or over here back in late 2018, early 2019, that just means that we are ready for a push to the upside. He goes on to say, here is a standardized ratio between market price and realized price. Market value to realized value, $24,000 would be in the green zone. Again, dips to / below realized price have historically signaled a capitulation style bear market bottom is in. So, even though this doesn't, at least it doesn't feel like a bear market to me, the lows are in. This is what they're saying, right? Lows are in, and we're looking for a push to the upside. Going back to December, I outlined this possibility and prefaced it with the opinion that it's unlikely to occur unless a significant liquidity crisis emerged in legacy markets. He prefaced this back in December, and sure enough, like I mentioned at the top of the video, from Danielle DiMartino, liquidity is drying up around the world, leaving investors with little appetite for even bargain EM stocks. So this is what we've got. Lark Davis here also mentioning this. Bitcoin RSI getting very close to oversold territory. Historically, a great buy signal when this happens. So just another metric here on the Bitcoin charts, just showing RSI very, very low once again. I've talked about this on this channel in the past. So a buying opportunity, yes or no? Well, we are seeing whales move XRP. Michael at Val5Links pointing this out. Whales have shifted 90 million XRP from unknown wallets to other unknown wallets, guys. And 90 million, that's nothing to scoff at. Whales have recently identified the aforementioned transaction of XRP, 90 million. This happened just today, May 9th. A crypto whale account shifted 90 million XRP from one wallet to another unknown wallet. Considering current changes in price value of XRP might be the reason behind whales' targets towards this latest transaction, as the crypto market is currently experiencing a bearish rally or a bearish descent. Whales use this as the right opportunity to store leading cryptocurrencies. Following an all-time high market valuation of almost $3 trillion back in November, the value of digital assets plummeted by roughly half in months that followed. So just looking at the total crypto market, we are looking right now at a market cap of just under $1.5 trillion. So 50% of the market basically wiped out. And you can see it here in the, wow, look at that, a sea of red, and it looks like those numbers are getting higher, whereas before we'd see corrections of like 4 or 5%. Now we're seeing corrections 8, 9, 10, 11% in some cases. This article goes on to say, even Bitcoin and Ethereum have dropped 14% within the past week, symbolizing the bear market since the beginning of the year. Okay, so some are saying, it's a bear market. We have been feeling bearish over the last little while. The 7 weeks or 6 weeks in a row of negative red bearish momentum definitely signifies that. We have not seen that since 2014. But the question is support going to hold, because that is really, I mean, I guess you could define bearish in many different ways. In my opinion, we have to break support in order to go bearish. Otherwise, we are just making higher highs and higher lows. Okay, so, but in this case, I mean, look, we have broken down this low. We have made an actual lower low now on the weekly. So now the next test is support at 50 cents, at least for XRP. Are we going to break through that? Are we going bearish? The other thing this doesn't jive with, unfortunately, is the theory that Bitcoin was going to retrace to the 0.702. That was one of those theories that was floating around that, Bitcoin still had a leg up to go, move up to the 0.702. We were going to see altcoins rally at that point, but we just didn't see that. So is this still a theory that is on the table? Is this still likely to happen? Are we still likely to see an altcoin market? Or are we going to see all altcoins move in tandem once we get some kind of regulatory clarity or some kind of black swanish event? All things to consider, guys. And again, the world is not the way it used to be even a year ago. So markets are very, very strange right now. Liquidity, again, drying up. How is this going to affect the space? So just with regards to the U.S. crypto regulation that Kim.com was talking about, James K. Filan here just giving us a quick update on the Ripple XRP case. Quick scheduling update. Ripple defendants' response to the SEC's brief claiming the Hinman documents are protected by the attorney-client privilege is due Friday, May 13th. Yes, Friday the 13th. Of course, we got a lot of memes here with Jason from Friday the 13th. I'm sure you guys know that film. Classic horror movie from the 80s. The SEC's reply to the Ripple defendants' response is due May 18th. So just some key dates there that we've got to keep in mind. And the Hinman documents, guys, the attorney-client privilege, this is going to be pivotal to the case. What kind of verdict are we going to get? What kind of crypto regulatory clarity are we really going to get? And is this why we're actually seeing the market go into the dumps? As per Kim.com here, he's saying, those in the know are already selling because they know what is coming down the pipes. Banning USD pegged stablecoins, for example, restrictions on cryptocurrency usage, KYC requirements. So this is all, obvious stuff that we could assume governments are going to implement. And so, his hypothesis is that the crypto market is actually dumping because of those particular things. I think, to be honest, it's part and parcel to what we're seeing in traditional markets. Nevertheless, he does bring up a good point. And where is Ethereum going to lie in all this? Getting the free pass, at least trying to get them the free pass, was definitely one of those strategies that the US was going to try to implement through the SEC in order for their insider whales to really profit from Ethereum token purchases way back when this whole thing started. Stefan Hubert here on Twitter has been one of these great critical thinkers with regards to the Ethereum SEC story. It all came down, it all kind of stemmed from the Ripple lawsuit, and then we started uncovering more. Stefan Hubert is one of them. There are a few others in the space. Well, Stefan, he finally decided to just outline all the smoking guns, all the red flags that he has noticed in the Ethereum case. Now, we know some of these, but I thought I'd add this thread because this is all kind of everything in one place. I know, we've kind of, gone over some of this scattered throughout the months, and I'm not going to play all this. I'm just going to go through it kind of quickly for you guys, but I will link it in the description for you if you are interested. This is the former head of marketing for the Ethereum Foundation describing how the founders can use levers and strange lending protocols to buy Ethereum with Ethereum. Do you remember this clip? I think this was something the XRP community discovered either a year ago or 2 years ago now. Let me play you guys this if you have not seen it.
So what they're doing is this. You've got $500 million worth of Ether, right? You can't sell $500 million worth of Ether without crashing the Ether price. So what you're looking for is ways of turning your Ether into money in ways which don't crash the Ether price by selling out and turning it into dollars. This is the core goal. So what they've discovered is a whole bunch of weird protocols that allow people to borrow, to lend money, lend their Ether out, and then claim interest on the Ether, which is then paid in real currencies. So what we're doing is we're building a whole kind of speculative leverage market. You've got 1,000 Ether. You want to buy more Ether because you think the price is going up. So you borrow money against your 1,000 Ether into another token, then you sell those tokens for more Ether. And so you've got all of this kind of leveraged financialization stuff going on. The critical thing is that it's all zero sum. Every penny made in these markets is being lost somewhere else in the system. And the non-zero sum use of crypto is like 0.25% of the total transaction volume. So, to all intents and purposes, what we've gotten is very, very, very aggressive, unregulated crypto speculation.
I forget this gentleman's name, but he was right there with the Ethereum Foundation near the beginning, and he is just explaining here the corruption of actually using your current Ethereum to purchase more Ethereum. Sounds like a Ponzi scheme to me. So this is just one of the many red flags here that Stéphane Hubert outlines. And then he mentions this, okay, the co-founder and business brain behind Ethereum and the CEO of Consensus calling for the obfuscation of all large investors in Ethereum by creating fake identities to deceive the public. This is Joe Lubin here in this clip. I'm not going to play the full thing. It's about 1 minute and 20 seconds long. But again, guys, I will link this thread in the description, courtesy of Stéphane Hubert. Number 3, that's the annual accounting report filed with the SEC, including an independent auditor report of Consensus, Token Foundry, Consensus's biggest revenue driver, according to Joe Lubin, which is said to have made at least $50 million in 2018. So you can see here some of the highlighted parts here. The company has commenced operations. However, it has not yet successfully consummated any transactions to generate revenue. And then just some other points down here that, again, I'm not going to go over it all, but I do think it is a great thread to kind of tie it all together. We've been going over this for months now, and all the points just kind of seem scattered as they've been discovered. Myself and, other YouTubers have been talking about this case. He goes on, number 4. This is the subpoena for Joseph Lubin and Consensus for fraud, breach of contract, unjust enrichment related to above-mentioned Token Foundry. So just again, another document relating to that. Breach of contract, conversion, quantum merit, unjust enrichment, fraud, declaration judgment, and unpaid profits arising from the defendant's acts in connection with the business known as Token Foundry. And then there's this, an article from March of 2022, just a couple of months ago, about a request from Consensus's parent company, Consensus AG, to investigate serious irregularities in the company's accounting. So, this is continuing to go on as well. This doesn't even just stem back years ago. It is a disaster in progress. Number 6, this is an article half a year earlier from November 2021 about a separate lawsuit in the Zug Superior Court by the shareholders of the parent company against Consensus for accounting regularities. These are some excerpts from the Swiss Commercial Register, which show that the money laundering tool Shapeshift has the same company headquarters in Zug as Consensus. So Shapeshift is a program that converts your cryptocurrency to other cryptocurrency, just kind of switches it over and uses a mixing program, I believe. And so they have the same headquarters in Zug, Switzerland. Again, the crypto space is a very, very small space, and all these guys know each other. I believe it's Eric Voorhees who created Shapeshift, if I'm not mistaken. This is the Ethereum founder's legal counsel at the time, who was himself convicted. He describes how the goal was to get money without going to jail. Again, another 2-minute clip that I'm not going to play for you guys. I've played it on this channel in the past. Number 9 here, though. This is a video of Joe Lubin, the co-founder of Ethereum and CEO of Consensus, describing how they knew from the beginning that Ethereum didn't work, and it was just about gaining experience and building a financial layer. Was this the clip actually where Vitalik Buterin said that it was going to take another 5 years to build version 2.0 or something like that? Maybe it wasn't this one anyway. I'm going to play you guys this.
A higher, more conceptual level, Ethereum 1 you could think of as a prototype. It was an impossible project that got built, and we needed to put out something that we knew wouldn't be scalable. We needed to do that to figure out how to build decentralized applications, figure out the developer tooling and the infrastructure that we needed to build them and deploy them. We needed to figure out whether it's possible to build companies around decentralized applications, because a number of years ago, people just thought, no, it's all code out in the open. The margins would go down to zero. There'd be people copying everybody back and forth. And of course, that's not true, because there's so much to building a product and a service and a company.
All right, I'm going to leave it there. Basically, Joseph Lubin explaining how this was bound to not work from the beginning. Red flag number 10, Vitalik describes how Ethereum, or how the Ethereum Foundation dissolves ETH Suisse in order to not be connected with the Ethereum token sale and thus avoid future legal problems. At the same time, the founders deleted references to their team from the website. Number 11 here. This is Vitalik Buterin as he explains during the pre-sale that Ethereum 2.0 will most certainly come out in 2016.
We are probably almost certainly going to release Ethereum 2.0 sometime around 2016 or so.
So complete hogwash, basically. When they knew, going back to this this clip over here, when they knew that this was never meant to work, at least version 1.0, and considering how much work and time, and manpower really it takes to put into these projects, how could they realistically assume such a timeline? Sounds like lip service to me. Stefan Hubert says, I could go on for much, much, much longer. Of course, I won't be able to prove with 100% certainty that the whole Ethereum ecosystem is one big Ponzi scheme, but that it is at least a scam is something you should seriously consider given the red flags that are available to all. So a great, concise tweet thread without even, going over all the points, but just bringing up, some of the major ones that some of them we've talked about on this channel in the past. Others are new to me. Even, some of these articles over here, these guys are just dedicated, to finding more information, describing how, essentially, Ethereum is a Ponzi scheme, and how, if we're not careful, purchasing the cryptocurrencies that really solve problems and add value to our lives, you could be in for something worse than this if the spec crypto market does in fact crash. So we're still waiting for that regulatory clarity, guys. Next deadline, May 13th. Are you feeling optimistic? Tell me down in the comments what you guys think, and please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.